Bitcoin just dropped to under $40,000. We had a peak recently at 49. We dropped to below 40. So what is next? Are we going to continue into the low 30,000s? Is the bull market over? Or was this the necessary correction? And are we in for continuation up towards 50,000 and higher, maybe even all-time highs by the time of the halving? I'm going to dive into the charts in this video and explain to you what I'm seeing. If you're new, welcome. Make sure to subscribe to my channel on YouTube. Make sure to follow my page if you're watching this on Instagram. And be sure to click that thumbs up or that like button to get this out to more people, to give them the information that they need to navigate these markets successfully. Okay, so as I'm recording this, Bitcoin is literally sitting just at about the $40,000 level, and it actually dropped into the low 39,000s. So the interesting thing to note over here, I'm going to get straight into this. It is the CME chart, and this is what I've been looking for. I made a video about this not too long ago, but basically talking about the CME gap. So CME is the futures on Bitcoin. It trades like regular finance hours. So they are closed on the weekend and they close every single day, just like the US stock markets do. So when Bitcoin, which usually trades 24/7, 365 in the spot market, when that moves while the CME is closed, then when it opens again, it creates these gaps. And these gaps on the chart, you can see over here, they actually tend to get filled. Now, it is not always a requirement where it absolutely has to get filled right away, but at some point, sooner or later, maybe in the next bear market, they do tend to get filled. And I just want to point this out to you. You can see here on the chart, for example, this gap, it ended up being filled. Then we had a gap here in early January, and you can see on that pullback, it came to fill that gap over there, and then it continued moving higher. Even this gap over here ended up getting filled, and now we had this recent gap, which absolutely just got filled. You can see over here during CME futures opening times, that's important, so it can't happen on a weekend. This just happened now during the week, and you can see that gap is filled. So now is the question, we're at an interesting point. This has obviously been a bullish trend since January of 2023 with higher highs and higher lows. We have had the 11 ETFs approved. We have the Bitcoin halving in less than 3 months at this point in time. So the question is going to be, is this the start of a larger correction? Do we still go lower, or has the correction now completed its objective of filling the CME gap? And obviously that's something we're going to have to wait and see, and time is going to reveal. But there are basically 3 potential scenarios here right now. Number 1 is on the CME gap has been filled and we continue to bounce and we just continue going higher into the halving. Number 2 is that this correction still has a bit more to come, where in case we break below the CME gap, the next target could be as low as about 34,000, which is about this level over here, the previous gap, and then continue going higher that way. And then the third potential scenario, which I think is the least likely, but we still have to consider it, is that this rally was all that we got, and that we just continue down all the way back to below this level from here, which I guess theoretically would be a possibility, but that would really be dependent on the dollar index continuing a lot higher, stock markets crashing, maybe some black swan event. So I think that is the least likely scenario. So now taking you back to the regular Bitcoin chart, not the CME chart, you can see over here, I've got some markings here, and I think this is basically just how to view the Bitcoin chart at this point in time. So we have this kind of $40,000 to $42,000 level, which acted as support multiple times. We broke below it. So that is perfectly textbook. The more times you test the level, the more likely you are to break it. Now that we have broken that to the downside, it has flipped to resistance. So if the bulls can get back above here, that is really a good sign, and this could just be a little bear trap and a little fake out. Then of course we have this level of resistance over here, so we have to be careful that it doesn't do that and then drop. But if they can flip this level, then I think we're in the clear and the bulls just continue higher towards all-time highs at this point in time. So that is basically the main scenarios, but the more bearish scenario, of course, is if we can't flip this level, then potentially we have all this liquidity here that I've circled here, this fair value gap over here, somewhere between 30 and 34,000 could be a possibility if someone really decides to nuke the markets. If someone market sells a lot, or basically, like I said, if the dollar index continues going higher, if stock markets crash, if there's some sort of black swan, yes, it is possible, I guess, in theory, that we could drop into the low 30,000s. Changing this to a 3-day chart, this is also going to be the key level for the bear or bull trend. In my opinion, this is what I am basing my bullish or bearish bias on. As long as we're above this 3-day 50 moving average, which is currently about $35,000, the trend is still bullish and any corrections here are still perfectly fine. So we could easily still drop to 35. If we bounce off here, just like we did here previously, that's perfectly okay and gives us a really good buying opportunity with a relatively tight stop because it should bounce when it goes off there. Okay, it can drop below it a little bit, so that's why I say into the low 30,000s, but we don't want to see 2 consecutive closes back below this 3-day 50 moving average if the bull trend is still here and still strong. So just bringing the annotations back, at this point in time, it is still completely possible that now the technical objective has been completed with this correction and that we actually don't go much lower. We're going to have to wait and see. 39.3, that was the CME gap. It got filled and now we're back at 40. So if the bulls can hold here and can push it back to above 42K, things are starting to look good for the bulls. Obviously, we have this resistance up to 46. If we get back above 46,000, then I think the bull trend is just back to full continuation and we could still see the front run theory play out where we could be back at all-time highs by the time of the halving in the next 3 months or so around April. That front run theory is very much going to depend on how the price plays out over the next couple of weeks, the next 1 to 2 months. If we see that play out, we want to see a relatively quick recovery here within the next 1 to 2 weeks and continuation in February and March for that to be able to have a chance. There's simply no time for us to have a multi-month correction now if the peak is going to be around about the time of the halving. Okay, there's simply no time. So that probably means that either we drop very quickly and recover very quickly, or this is already the bottom of the correction, the CME gap got filled, and we go back up towards the end of the month for a better monthly close and continuation back up in February, March into the halving by all-time highs. Let's see if that plays out. If not, and we do get extended downward correction, then maybe we have to adjust what the theory is going to be. Maybe at that point we don't get a top in April, and maybe we do have more of an extended cycle. But that is something that I will start to consider if the front run theory looks like it's not going to play out. So for now, my main theory is still we bounce relatively quickly, probably by the end of the month, and continue going higher Feb, March, April. If that doesn't happen, if we get a bearish monthly close at the end of January now in about a week from now, then I will continue to update and maybe we just have to adjust. That is how these markets work. It's about probabilities. You have ideas, but you let the chart guide you. And if the chart is showing something different to what your theory suggests, then you simply have to follow the chart because that is what is suggesting where things are likely to go next. So finally, I want to bring your attention here to the monthly chart and keep in mind there is about 8 days left before this monthly candle closes. So at this point in time, the way that this candle is looking right now, that does look bearish. You can see that's a big wick just above this high into the Fibonacci golden pocket of the whole bear market. If this were to close like this, I would probably lean more towards bearish. But there is still 8 days left of the month. If this continues to pull back up and we can close at 45 or higher than 45,000 for the month of January, there is a complete possibility that this correction was just very much the needed correction that we had. You can see just like January 2021, you can see it also had that big wick up, but it closed with a green body. So if this closes with a green body above 45,000 for the month, I would say there's still a very decent chance that we continue with the green Feb, March into the halving, into the April, and potentially be back at all-time highs at that point. So it's going to be very important to see how this month closes, and obviously I will do an update, so be sure to subscribe to my channel and follow my page on Instagram because I will do these updates regularly. I will do one on the first of the month after we got that monthly candle close. By the way, if you do want to learn more from me about charting, about analysis, you want to be part of my VIP Discord group where I'm in there every day sharing charts, sharing ideas, click the link in the description down below. You'll be able to join VIP. It's risk-free for 60 days, so sign up, come try it out, see if it's for you. All my courses, monthly newsletters, monthly video updates, daily charts, the ability to talk to me directly, join our community of more than 2,200 members. It is all there. The link is in the description. Come and join VIP. You have 60 days to try it out. If you want your money back within that period, no problem at all. There's no strings attached. But come and join us. If you're trading, if you're investing, that is the place to be, and it can make a huge, huge difference to your overall understanding and your overall results and bottom line of how much you can profit from these markets. So come and join us. The link is in the description down below. Thanks for watching, and I will see you in the next video.